Good morning, everybody. This is Tuesday, the 10th of January 2017, and I quickly wanted to take a look at how reversals usually present. So, usually at the top of a trend, you get that sort of candle. It's referred to as a doji candle. So, what it is a red little candle with a long wick going up, as you can see. That's not always the case, but it is often an indicator. You can see there, you can see there, you can see it over there, you can see it over there. So how are they formed? Well, they're formed when there's a run up in price and it gets pushed higher, but then it doesn't have the volume and traders don't have the conviction to stay high because they don't expect the next day to open higher. So what happens is when it does reach a high, they either close their positions or they close their positions and they can move to a short position, meaning that they're expecting it to go down. So when you get this sort of high wick building up on a candle, then usually it starts off like this. It's exciting, it's all green, it means that price is high, but slowly throughout the day, price comes down. So that when that trading price goes below the opening price, the candle turns red. So let me show you an example of that. So this candle that you're looking at here, you can see the high wick building up. Now it doesn't start off in the day like that. That's where trading comes in. It starts off green. So where did this open? This candle opened higher. It gapped up, as you can see there. Then price ran up and it feels good and everybody's feeling good, but what happens is it reaches a top, so at a resistance level, and then price starts reversing. Now retail investors like you and me, we don't like to exit positions because it's so difficult to make money that when you finally do make money, it's very difficult for you to let go. That's why I would say if you're reaching the extremities of a trading box, you should really go in with a trailing stop loss. I will go into a trailing stop loss at some stage. But what happens is, I want you to imagine that this candle, it opened up at this level, so it gapped up, and it's a green candle going up all the way. So what you've got is you've got one of these green candles up here. And that feels fantastic because you're in the money and your balance is showing positive. But as it starts reclining or receding, it starts to form this wick. And the wick grows and that green candle gets smaller and smaller up to the point that you pass the opening price. And once you pass the opening price, it turns red, and when it turns red, it can keep on going. Now, that is a reversal candle, meaning that the next few days you get a correction. That doesn't mean that it's over for the share. It doesn't mean that it's a bad company. This is Evolution. I think that they're one of the best gold miners around. But as you know, any share fluctuates in price. So whether it's the best company in the world or the worst, you would still get fluctuations in price. But what you can see is this candle here, this wick, it formed the reversal signal, so that even when it came down a few days later and retail traders like you and me buy the dip and we push it all the way up to there, the big boys holding the bulk of shares use that as an opportunity to sell back to us, and they offload until we finally start breaking through some resistance levels, and then this happens. Okay, now I don't think this is happening because gold is in a reversal rally, even though it's slowing down slightly. I just wanted to make sure that in the future, when you are watching your stocks, then be aware that, for instance here, if Evolution Mining, I haven't chosen Evolution for any particular reason, I'm just looking at it currently, but let's say that this stock, whatever it is, it's got a green candle, it's building up, but it fails to break that high, right? If this candle starts becoming red, then you should know that, number one, this is a double top. Number two, this is a reversal sign. This is a sign for those who want to sell the market short. They jump onto that because what you could find is that it gaps down, you would get a buying of the dip, gaps down. So it's not certain. I'm not saying that's what's busy happening with Evolution Mining, but I do want to make you aware that of how reversal candles are formed. They don't start out like that. They start out green. They start out great. And then when the reversal starts happening, no one can see it until it's too late. So take that as part of your trading arsenal. Make sure that you know how candles are formed. I certainly don't use this kind of charting. This is rubbish. It doesn't show you anything. It only shows you which way is up and which way is down. You definitely need to have a look at your candlestick chart. Okay? Now on a day chart, let's have a quick look at what that looks like. Okay. So what you can see is the bigger the candle wick, the more powerful the correction. Look at this. Who wouldn't want to be part of that rally there? That is fantastic. But look at the size of the wick. Okay, the next day it gapped down. You get those who are buying the dip, rallies up, still forms a wick. The next day it gaps down, and it just looks like retail traders don't really get the message of what's happening here. This is excitement. This is buying into a rally. It knocked your socks off. The price is so high, it's good. The next day it gaps down, so you think you're gonna have this happen again, so you buy it, and then the rally is a rally, but it's smaller. The next day it gaps down, and it takes a couple of days for retail traders to figure out what's busy happening. Now, looking at the day chart here on this miner, like I said, it's Evolution Mining. I love Evolution Mining, but that doesn't mean that it can't reverse. I can choose any other. Let's move over to another miner. Let's move over to RMS, which is one of mine. Let's have a quick look at the candles. Okay. So what you've got on RMS, if you look at this candle over here, you can see that that was a very strong reversal. It ran up green all the way, but it closed no higher than the day prior. The next day, traders tried to take it higher, but it closed exactly where it closed the day prior. The day following, it gapped down and traded inside this chart, inside this box here. So what are we seeing right now? On the day chart on RMS, we're seeing a fantastic rally. Look at that. But what we were also seeing is that so far, and it's only been an hour and a half of trading on the ASX, but if this continues, then this would definitely be a profit-taking signal for me. I wouldn't want to be greedy and just remain there expecting something better and better. This is better. Even this is better. A rally is better. The trade is good. So if this candlestick stays here on Ramelius Resources, for instance, and like I said, I've got nothing against Ramelius, but if we don't finish with this candle basically being near the high, and if it forms this wick, then that would be a reversal candle. And that's what you need to be aware of. It doesn't start out like a reversal candle. It starts out green, and then later when price falls lower and lower, then you'll get retail traders trying to buy this bounce, and that's the wrong thing to do, because you're basically buying into a reversal candle. So it's not rocket science, and it's not certain either, but you got to stack probabilities in your favor if you want to be a successful trader. And if there are indicators showing you that you should be cautious, that is exactly what you should do. You should be cautious. Okay, guys, take that on board. If there's any questions, leave it for me in the comments section. Thanks for all your support, and let's see how the miners close today, whether or not this is a reversal, or whether or not we're going to continue this rally. If it continues like this, and if this closes red, I would want to be taking profits for myself. Thanks.